Hey everyone, welcome back to AWM Insights. It's your Power 3, 2 CPWAs and a CFA. We are Erik, Brandon, and Justin. And the news continue to be dominated by the conversation around this stimulus package, the back and forth between President Trump and the Democrats. Last week, President Trump trying to slide something in there for the airlines, and Nancy Pelosi said, absolutely not. We're not singling out the airlines without taking care of everybody else. And so markets continue to react to that. And then we're headed into earnings season, and this is definitely going to keep the markets being volatile.
Well, hold up, E. Let's not just go earnings seasons from here. There's a lot of other things out in the news. We'll stick with the government. The House Judiciary Committee has continued to kind of stick their nose in the tech sector, and they've just released their 450-page report on the findings that they've gathered over a 16-month investigation. So it's quite a long time to be looking into something like this, but they've got the state of competition, the digital economy. They're making their recommendations. And then we've got the SPAC craze just continues to proliferate. We've got now Shaq jumping into the mix, which is, I guess, fun to see, but also somewhat concerning, right? Where's the canary in the coal mine around this? It's got to be coming soon. And then we've got the whole energy sector that's been pretty fascinating. We got the headline that Honda's pulling out of Formula One, which is a big deal, and they're doing it to focus on the electric car market. And then we got NextEra Energy, right? The leading solar and wind power generator in the world is now worth more than ExxonMobil, which, ExxonMobil previously one of the top, the largest company in the world by market cap, but it's lost half its value here in 2020. So, there's a lot more going on than just earnings season, but I know, earnings season is that big deal.
Yeah, and those long-term trends are super fascinating to keep an eye on, right? Whether it's Honda going to focus on all electric or NextEra or whatnot, but there's no shortage of news items that the financial media is going to be covering, let alone the election and taxes and whatnot. But as we've mentioned, earnings season kicking off here at the end of the quarter, they love that. There's so many data points for them to latch on to as it picks up here. It's been pretty quiet this first week after the end of the quarter, after the end of September, but we're going to really start to see things ramp up here. And it is a lot of noise. So you got to be careful out there. Don't get excited about an earnings beat or a miss or something like that. It's too short term to focus on quarter over quarter earnings or the stories that the financial media will try and uncover and blow up into some eye-catching item, whether it's online or watching CNBC or Bloomberg or something like that. You gotta stick with the long term. You gotta stay disciplined. Don't chase fads, whether it's on the SPAC side of things or not. But it's going to be eye-catching and trying to get everyone's eyeballs going forward here.
Yeah, and I think we've experienced this. I know I have this week. I joke around of where I get my favorite Acorn / Robinhood tips from is when I'm working out at the gym. And it's an endearing term in at the gym where we like to be known as the average Joes, but we don't want to be that on the investor side yet. One of the things that I've heard a ton about this week is Peloton. And it's something I own one. My dad owned one. We joke around when my dad starts talking to us about, should we invest in Peloton in the public markets? This is exactly what we're seeing in earnings season is trying to anticipate the future, right? Is going, what is popular in our network right now? Should I go invest in that? And in this time of the volatility and we're seeing people making a lot of returns, Justin, is, should we be trying to take advantage of this earnings season? I understand we want to be a long-term investor, but it kind of seems like this is the perfect time as news is coming out that I should be trying to figure out which companies to invest in.
Yeah, and like I said, man, the quarter over quarter stuff is really just noise, and there's all these little anecdotal statements around earnings season, buy the rumor, sell the news, and et cetera, the stuff you said about Peloton and how it just is eye catching and something that financial news media really pushes out to the public. And with Peloton specifically, that story largely, at least so far, has been in the private market side of things, right? Which one of the funds we've been invested in was lucky enough to participate in that. And we've talked about that in past podcasts, where there's a lot of gain occurring on the private market side before anything does go public. Further to that, I would say don't chase returns over the long term, right? A lot of the expectations are going to be priced in before earnings are released, or with anticipation of some long term expectation. Again, I keep using the term noise within earnings, and it really truly is that. You need to see the long term trend over a cycle of investing, and we are certainly focused on that as investors ourselves. We always want to think about the long term, and that is 20, 30-year cycles, right? We're not talking about quarter over quarter timeframes here. And then most importantly, it's focusing on what you can control within that long-term framework, right? Controlling expenses within a portfolio, controlling your spending, your personal expenses. And then almost most importantly is the tax side of things, right? Being tax aware. After tax returns are what truly matters. That's what people are going to spend at the end of the day or be able to give away. So whether that's harvesting losses, thinking about asset location, holding tax inefficient assets in more tax preferred account vehicles, or muni bonds, which we've talked a ton about a lot lately, or even smart charitable gifting, right? If that is something that is within your financial plan, that should be taken into account within a portfolio, giving away things that have appreciated in value and have an embedded gain there, et cetera, et cetera. Really, at the end of the day, with the long-term investing framework, and this ties into a lot of what one of the most famous investors of all time, Warren Buffett, believes in, and how a lot of his wealth was built was not incurring taxes, holding on to gains as long as you can, and allowing that to compound over time on itself again and again and again. I think it was Einstein, right, who said one of the most powerful forces in the universe is compound interest or compound returns, let alone to do its thing over and over again.
Yeah, it's helpful. What I hear, right, is while the news media can get us hyped up and wanting to try and predict these individual stocks to increase gains, we know that all the evidence-based research shows us that we can't outperform the markets by individual stock picking or market timing, but the things we can do to juice our returns is controlling expenses and controlling taxes. And going back to the government in the news, right? A big thing that is in the focus in the vice presidential debate, and we absolutely know is going to happen in the presidential debate, is really around the tax plans. And whether it's President Trump or it's Vice President Biden that is elected, the one thing that we do know is that there is going to be ramifications for your taxes. And so no matter what your politics are as an investor, we know that you personally want to pay the least amount of taxes in your investments. And so regardless who ends up in the White House, there's going to be critical changes that you absolutely need to make to your portfolio. And one of the things that we want to do to help you guys with that is we're going to be delivering a free educational webinar following the election, where we're going to know all the details on how to actually help you optimize your portfolio in the most tax efficient way. And so make sure that you head over to awmwebinar.com to register for that free educational webinar. And once again, that's awmwebinar.com. And until next time, stay humble, stay hungry, and always be a pro. The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.